Is the AI sector of the stock market with booming stocks like NVIDIA and Palantir about to burst? Is it really in a bubble? That's what we're going to talk about in this video today. Before I get into the content though, if you like receiving dividend stock updates, please consider subscribing to this channel. I discuss in weekly videos my favorite CEFs, ETFs, and individual dividend stocks in the moment, along with my investing philosophy and my macro outlook as well. And I also occasionally share some model portfolios that I am currently implementing to retire on dividends. Thank you very much. Okay, so let's talk about the AI boom. Well, as it should be no secret to you, AI stocks have been the hot trade recently, with stocks like NVIDIA, Palantir, Meta, Microsoft, Apple, Alphabet, et cetera, booming in recent years. And it all really boils down to the fact that AI is a transformative technology that is expected to revolutionize the global economy. Not only are large language models currently disrupting online industries in particular, but the advances in robotics as well as agentic technology give the possibility for AI to dramatically disrupt all sorts of industries, from doctors being able to perform surgeries with robotics to assembly line workers being fully replaced by Tesla bots, or potentially even waiters at restaurants being replaced by Tesla bots. Certainly drive-thrus can be replaced. Warehouses at companies like Amazon and UPS are becoming increasingly, if not entirely, automated. Obviously, auto space is being disrupted by the potential for fully autonomous vehicles powered by electricity. You have the potential for even engineers, and certainly in the software space, a massive disruption, displacement going on due to the ability for LLMs to code. And then if you implement that with agents, you could really disrupt those sectors. Financial sector is also ripe for disruption, with LLMs increasingly being able to do sophisticated stock analysis, and you combine that with agentic technology, it can begin to do autonomous research and make real-time decisions and produce high-quality analysis. Now, we're still a far way away from those things being fully implemented, but the potential is certainly there. And as a result, many view the writing as being on the wall. Well, recently, the brakes have been pumped a little bit on this sentiment, because you had various occurrences happen. First, OpenAI released its highly anticipated GPT-5, and honestly, it's been pretty disappointing. Yes, it is better than GPT-4/4o in many respects, but it's not nearly the step size advance that many were expecting. As a result, it appears that LLMs seem to be peaking right now in their ability. Yes, there's still some incremental improvements, but the improvements are decelerating. And so it appears that now the next big steps forward are going to be in agentic technology and robotics, to be able to take the intrinsic intelligence of these LLMs and really implement them in the real world. Now, this urgency to develop these additional technologies was further heightened by a recent MIT study that was published that showed that about 95% of companies are currently getting zero profit off of their AI investments. And so right now they're just implementing AI methods and solutions, but they're not really seeing any bottom line benefit yet. And that's largely because they're currently just implementing the infrastructure, getting refreshed on what's going on. They're trying to keep up, not wanting to get left behind. And so they're positioning themselves for this long-term expected expansion and really explosion of AI capabilities. However, again, until agentic technology and or robotic technology can really improve in a major way, these LLMs are largely confined to the computer, and they're basically just a enhanced calculator and Google search engine for many employees. And so yes, they're an augmenter that makes work more efficient. They've helped me some with my work, not a lot, but a little bit. And so, yeah, it's a good tool, but all this money, the hundreds of billions, really the trillions of dollars globally, and all the hype that's being poured into this sector, both in terms of investment directly through CapEx, but also government subsidies. And then of course, the market valuations being attached to some of these companies like Palantir and NVIDIA, for example, are just huge. There needs to be more to really justify that. And so agents need to come, robotics need to come and really take a major step forward. And so the question is, when is that going to happen? Well, those are tough technological problems to solve. Really smart people, a lot of money focused on solving them, but it's hard to know exactly when. And even Sam Altman, the CEO of OpenAI, who is considered, one of the leading champions of AI's potential in the future, and certainly has a financial incentive to be bullish on it. Even he admitted that he thinks that AI marketplace, the investors, is in a bubble. They're overly enthusiastic about the near-term possibilities of AI. Now, long-term, he reiterated, I remain very bullish on it. AI is a real thing. but I think we've gotten a little bit ahead of ourselves. And personally, I've felt this way for a while now. I think that we are in some ways like we were in 1990s with the internet. The long-term potential of the internet to dramatically transform the economy, which turned out to be the case, was there, and people saw it and they got excited about it. The problem was it wasn't quite ready for game time yet. And so people were getting really excited, pouring a lot of capital into the space. But a lot of these companies were just a name only or an idea, but there was no practical implementation and clearly no near-term path to profitability. Sure, if you pick some of the winners, like Amazon in the 90s, you made a ton of money, but many others, went to zero. And so I think we're in a similar concept here with AI, maybe not quite as premature. I think, because we have the internet, because we have some of these other parallel technologies that are coming into play that can make AI that much greater, that much faster, I do think maybe this is a little bit more justified than the internet in the 1990s, but I do think there is some of an effect there. And so with all that being said, what's the future for AI here, and how should investors, especially dividend investors like myself, be viewing it? Well, some would say, I missed out on the AI boom, and that's true to an extent. Yes, I've had investments in Palantir. I even held NVIDIA for a little while, and I've been invested in some other AI-related stocks, and I've made good money off of them. But yes, I've sold out of them, I guess in hindsight, too soon. But that's because I'm driven by valuations. And so, yeah, I've not completely missed the AI boom. I have made some money off of AI stocks. High yield investor, since we launched in December of 2020, we've outperformed the S&P 500. We've crushed the high yield space. So my total returns haven't been worse off. And I would say I'm actually very much investing in the AI boom. And what I view myself as doing is investing in the second leg and really the long-term effects of the AI boom. While I haven't been chasing the early popular winners like NVIDIA and Palantir to the extent as some have. Again, I've held shares in them in the past and made profits, just sold out too soon. Done the same with Broadcom. But instead, I've been focusing on the energy infrastructure plays. Like I've made a bunch of money off of Vistra Corporation. And today I'm very aggressively invested in a lot of the energy infrastructure and AI infrastructure stocks like Brookfield Infrastructure Partners, which is heavily investing in data centers, Brookfield Renewable Partners, which is providing energy, whether it be hydropower, nuclear power, solar power, etc., and selling it to AI companies like Microsoft and Alphabet with these long-term multi-billion-dollar power purchase agreements, and so on and so forth. These are the types of opportunities that I'm taking advantage of, and I've made good profits off of them, and I believe I'm well positioned to make significant profits in the years to come because the market is not fully appreciating it. Additionally, when you have ETFs like SCHD, the Schwab US Dividend Equity ETF, trading down and really trading at a big discount, a lot of people giving up on it, saying, it's dead money, its time has passed, chase the hot stocks, and if you really want income, go for one of these covered call NASDAQ-focused ETFs like the JP Morgan NASDAQ Equity Premium Income ETF, JPQ, or the NEOS product, which is QQQI, or some others like that. Okay, sure, if that's your thing, go for it. But my view on SCHD is, first of all, it's overweight energy now, and I think energy is entering into a boom period because of AI is going to need a lot of energy, and the reshoring of industrial activity to the United States is going to increase energy demand here in the United States. And so I think that bodes well for a fund like SCHD, which is concentrated in U.S. energy companies. But I also think its exposure to blue chip dividend stocks that are consumer and corporate focused, for example, like Home Depot, which it holds, has PepsiCo, Coca-Cola, these kind of companies in its portfolio. These are all businesses that I expect either A, are going to play catch up and benefit significantly from the AI boom in the coming years, despite it not being priced into their stocks today like it is some of these other early AI winners, or B, these current concerns like the MIT study that just came out, and let's say AI doesn't fulfill its potential. Let's say agentic AI and robotics do not make the necessary leaps in any reasonable period of time to really bring AI profitability to companies. Well, then the broader market, S&P 500, which is dominated by these mega cap AI tech plays, those are going to nosedive as the big future profitability that was expected and is priced into their stocks today does not manifest it. They're going to fall back. And so SCHD will still outperform, albeit maybe they won't do great either, but they'll still outperform the broader market. And so I think no matter which way the AI bubble goes, I think SCHD is very attractively positioned on a risk-adjusted basis. And not just SCHD, I think the broader dividend space, again, whether you're looking at energy infrastructure, like I just mentioned, I think is especially well positioned. Real estate, even BDCs to a certain extent, and other dividend stocks, I think are well positioned regardless of how the AI boom plays out. Because again, if AI fulfills its potential, You're going to have stocks like Coca-Cola, Home Depot, et cetera, that are going to benefit from AI because between robotics, they're going to have a lot of automation in their production lines, and their warehouses and their supply chains are going to be more automated. That's going to cut a lot of costs. They'll be able to remove a lot of labor even from the stores themselves because of that. And even agentic AI is going to boost them in being able to do operations online, and they're increasingly digital focused businesses. So that's going to cut a lot of their costs out and improve their efficiencies. And because they have such large moats with large economies of scale, large treasure troves of proprietary corporate data, what they're going to be able to do is leverage that to create proprietary machine learning models that will give them an edge over smaller competitors. They're also going to be able to invest more aggressively in developing their AI capabilities, more so than smaller peers, and therefore be big winners from the AI boom. And again, this benefit is not priced into their stocks if you look at them today. So I think that's going to lead to outsized performance for them moving forward. So that's really how I'm viewing this. Certainly if you're all in on the AI boom, you're investing in Palantir, which is like a leveraged bet on AI, basically. Yeah, you may be concerned right now, and there may be good reason to be concerned. I think, personally, I would be selling Palantir today if I had it. Again, just because the valuation is so stretched. I think it's a great company. Always have thought that in terms of its ability to grow and benefit from AI. Same goes for NVIDIA, et cetera. But if you are still like me, you think AI is a real thing over the long term, but you do think maybe expectations got a little bit ahead of themselves, I think investing in energy infrastructure on a value basis, pick your spots there, because there's some froth in that space too if you're not careful, or AI infrastructure in general, but also investing in some blue chip, large dividend growth stocks that are undervalued today that have a clear opportunity to leverage robotics and or agentic AI as they become more advanced in the coming years, and they have the capital to make those investments and take advantage of them. I think those are other good ways to play right now, especially as the market becomes increasingly circumspect about really is the AI opportunity quite as near term as it had been pricing it, and may instead shift capital more towards these longer term opportunities that still deliver attractive profits today, such as Home Depot, Coca-Cola, etc. So there you have it. That's how I'm approaching the AI boom right now, especially at this potentially inflection point where people like Sam Altman are giving people some pause to think, okay, am I really paying too much for this sort of stuff right now? So hopefully that is useful for you as you think about how you approach things as well. Let me know in the comments below, what do you think about the AI boom? How are you positioning your portfolio accordingly? And again, if you like this content, please give the video a like, subscribe to my channel for more like it, and I'll see you next time. Thank you very much.